Good morning and welcome to Stock Market Today. Happy Friday, April 26th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me here on Twitter at Dan_Russo_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics in conjunction with StockCharts.com, which airs this show every day in the 9:15 slot. And a special shout out to See It Market for posting our work every day. If you're not reading See It Market's work, highly recommend you head over there, check out some of their content. U.S. equities were a bit lower overall in Thursday's trading. Treasuries were mostly weaker as well, with some curve flattening. Dollar was down on the yen cross, but stronger against the euro. Gold finished little change. WTI crude down 1%, dropping to session lows at the closing bell. The sector level, healthcare, comm services, utilities, and fins outperformed. Losers, industrials, materials, consumer staples, consumer discretionary. And as we get to the desk this morning, S&P futures are down about 10 basis points. NASDAQ futures trading higher. Thank you, Amazon. Mixed earnings reports overnight. Asian markets were mostly lower. China extending its recent underperformance. Down 1% overnight and off more than 5.5% for the week. We're going to have to take a look at our thoughts on China. European equities are on the defensive as well. Treasuries are firmer across the curve, building on strength from earlier this week. Dollar is stronger versus the yen, weaker versus the euro. Gold up 20 basis points, and WTI crude is off more than 1.5% today. Remember, I said I thought oil was hitting resistance. Speaking of hitting resistance, S&P 500 pausing at resistance near those all-time closing highs. We've been talking about 2,900 to 2,940 as a resistance zone. Support comes into play 2,850, then 2,800, 2,815. Working off a bit of an overbought condition here. RSI up here around 70. Stock market trading into resistance and overbought levels. We would expect to see a stall out. Again, the game plan is the same. Look for a stall or a pullback. RSI remains in bullish ranges. Chaikin money flow remains bullish. That's when you get aggressive on the long side. We're going to take a look at some of the key relationships that I look at. We haven't done this in a while. I haven't been here on a Friday in a while, but some of the key relationships that I look at are starting to flash some near-term signs of caution. We'll take a look at what that means. RSI hits overbought levels. Chaikin money flow remains bullish. Trend remains bullish. Question is, do we want to chase it here, or do we want to give it some time to consolidate, setting up a better entry point? My answer is B, consolidate, set up a better entry point. Let's take a look at what else we're talking about today. Your market in a minute. S&P 500 stalls at all-time closing highs. We hit that. Key relationships beginning to show signs of caution. We'll take a look at that. That means, in particular, Intel's report last night is likely to weigh on the key semiconductor sector, which are trading near relative highs. We're going to look at semis. You know the importance I place on them. We're going to do a little bit of an analysis on that here today. Futures point to a mixed open, as I said. S&P futures are down. NASDAQ futures are up. Major markets yesterday was really the Dow was the big story with 3M's report. 3M accounting for all that and then some of the decline in the Dow, down 51 basis points. 9 bulls, 2 bears. Still, everything's still skewed to the bullish side. S&P 500 flat on the day, 139 bulls, 56 bears. NASDAQ outperforms. We've been talking about it. We like large cap growth. When you hear large cap growth, you should think QQQ. NASDAQ 100. 26 bulls, 10 bears, up 37 basis points yesterday. Small caps, on the other hand, you know we've favored large caps over small. Small caps beginning to turn lower on a relative basis. Again, 526 bulls, 284 bears. So it's an interesting dynamic because we have this trend of underperformance in the small caps, but the fundamentals are telling us that they're strong. Right? Remember, this is our model, which is mostly fundamental. So what are we looking for? We're looking for a stabilization in that relative trend and then a move higher for us to get more aggressive on the small cap side because the fundamentals are there, but price pays. Let's focus on price. Bonds down ticks short slightly. Comm services, big outperform on the day. Thank you, Facebook. 11 bulls, 5 bears. Comm services up 1.12%. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Stock of the day today, speaking of semiconductors, Cypress Semiconductor, ticker symbol CY. Has a very bullish Chaikin power gauge rating due to very strong earnings performance, attractive financial metrics, positive expert activity. Stock closed at 16.18 yesterday, down 2.41% following their earnings announcement. Could see some pressure here today. We'll see why in a little bit, but I'm not excited to chase strength in semiconductors. I want these stocks to come to me now. Very bullish stock, strong trend, strong industry group type of name we want to own. Market model in agreement. Dynamic duo in gear really since the February timeframe. Money flow has been oscillating. I'd like to see a little bit more bullish persistency, but okay, we take a weight of the evidence approach. We're getting close to oversold conditions, not quite there yet. I want that oversold condition, especially in light of what I'm going to show you in a little while when it comes to the semiconductor stocks. Another thing to be aware of with a name like Cypress, and you should be aware of this with all your stocks. I really do think it makes sense to have somewhat of an understanding of what you're trading, at least on a high level. Cypress Semiconductor gets a large portion of their revenue from Apple, an exorbitantly large portion. Just something to keep in mind. You may have ever heard the term customer concentration risk at some point in your investing career. It's when one company gets an overly large percentage of their revenue from another company. That's customer concentration risk. Cypress has it with Apple. From a trading perspective, though, I think as long as we hold above $16 and induce an oversold condition, you want to buy the stock. You can see your line in the sand, clearly defined risk reward. Above 16, in the near term, you're playing for over 18. Not a lot of risk to the downside. Wait for that oversold, pull the trigger on Cypress. Sector tracker, movement of the major sectors over the last 5 days. Healthcare, top of the list. Now, for those of you who have gotten on to our market survival guide, new product, Chaikin Analytics, that I author, comes out once a month. We've talked about it here for the past couple of days. You will know that I was making a bullish call on healthcare back on Tuesday. I was saying it was overdone to the downside, and we were looking at ways to play it. Healthcare up 2.5% over the past 5 days. Communication services up 2.5% over the past 5 days. A lot of strength in Apple. Also, some of the other FANG stocks. Tech outperforming. Utilities getting back in gear. So is real estate. You know my thesis by now. I want to own large cap. I want to own secular growth, and I want to own bond proxies. They're starting to outperform, getting into gear. Bottom of the barrel here, I don't want to own materials. I don't want to own energy. Why is that? Because the dollar is breaking out. Dollar breakout, negative for commodities, negative for commodity leveraged equities. Watch your materials, watch your energy, look for opportunities. As a matter of fact, in Tuesday's Market Survival Guide, I hold out a bullish trade in the energy sector. Speaking of energy, oil and gas equipment is our industry in focus today. And you can see here, it's been one to avoid, and we want to continue to avoid it for the reasons that I just said. 18 bearish or very bearish stocks, only 3 bullish or very bullish stocks. Over the past 6 months, group has underperformed the S&P 500 by 21.5%. Its power bar ratio, which measures future potential, is very weak, with more bearish than bullish stocks. Currently ranked number 20 of 21 subsectors, and it has moved down 3 slots over the past week. Some of the indicative stocks there, Core Labs, CLB, has a very bearish rating. Schlumberger, SLB, very bearish rating. And Superior Energy, SPN, also with a very bearish rating. Let's take a look at Core Labs, because despite the breakdown yesterday, I think you want to play this to the bearish side. Very bearish stock, weak trend, weak industry group, type of name we don't want to own. Actually triggered 2 of our proprietary sell signals yesterday with this breakdown. But what's interesting is we're just now exiting an oversold condition. I think there's time here. I think there's room to the downside. I think you want to look at your options. Look at put options or bullet or bearish or vertical put spreads to take advantage of continued downside in Core Labs. Let's run through the analysis. Market and model agreement. This really could be a poster child for a Chaikin classic bear. What's a Chaikin classic bear? Downtrend, bearish rating, drastically underperforming the market, persistently bearish money flow. This one checks all of the boxes. And I think you can open to the bearish side today. Very bearish stock, weak trend, weak industry group, underperforming the market, oversold 2, not 1, 2 of our proprietary sell signals. Play the downside in CLB. Trending names now. Yesterday's S&P 500 movers and shakers. Cincinnati Financials continues a string of financial stocks doing well following earnings. Facebook up nearly 6% on their earnings announcement. Lam, investors like what they had to hear out of Lam's report, sends the stock up 5%, but let's see what the semis do today. Thank you, Intel. Hershey up 4.5%. Hershey has been an outstanding performer over the past few months. FBHS, a name that I'm not familiar with, but up 4.5%, has a bullish rating. I'm going to start doing some work on it. It's the beauty of having an objective model, right? You can find names that you otherwise wouldn't, right? Everybody wants to focus on the names that are in the news all the time. And I talk about the Fang stocks and I talk about NVIDIA, but your opportunities are in some of these overlooked names that nobody's ever heard of. Loser side of the board, Xilinx, speaking of semiconductors, down 17% following their print. Triple M, we talked about that one, down 12.9%, really weighed on the Dow. Freeport McMoran down 10%, IRM down on earnings nearly 9%, and UPS. Let's look at what the signals are telling us here. Let's start to pay attention. Trend in the market is still up. But when big names like 3M and UPS that are levered to the economy start trading off hard following earnings, we want to start to pay attention to that. Speaking of earnings, Hess beat by 35 cents. Anadarko, and the bidding war for Anadarko, so I'm not sure how important earnings are at this stage of the game. Valero beat, but I'm not sure anybody's going to care. Energy stocks under pressure. Ford trading through $10, beat by 18 cents, and Amazon beat, stock trading higher overnight and in the pre-market. Before the open today, we'll hear from American Airlines. We'll also hear from Franklin Resources. Franklin Resources is an investment management company. Speaking of healthcare, Zimmer, ZBH, Zimmer Biomet, big name, reporting before the open here today. Neutral stocks of interest, Archer Daniels and CL. And then bearish names, IPG and VTR. Let's dive into it now. Fridays, I look at key themes and relationships, and one of the most important themes and relationships that I look at in the marketplace is how are semiconductors performing relative to the market, because they tend to lead at tops and bottoms. And the question is this a top? We have now hit resistance from late 17, early 18, mid 18. We're in that resistance area right now and beginning to turn lower. RSI of the ratio, overbought, very extended from the 200-day moving average. This is an important indicator. And remember, this is as of last night's close, so it's before Intel's print last night. Likely going to see some further weakness today. If this ratio begins to trend lower, that's bearish for the market with a bit of a lead. Notice when we topped here. Topped in November, December of 17. Market topped in January of 18. Then we topped in March, April. Market topped again in September. Notice how we bottomed here. The ratio bottomed in November. The market bottomed at the end of December. It's a leading indicator, folks, and it's an important one. This one should be on your screen at all times, especially with it trading up here near key resistance levels. Another theme that I look at, get an indication of how investors are thinking about risk in the marketplace, is high-yield bonds relative to treasuries. So we look at HYG relative to IEF, high yield relative to the 7 to 10-year treasuries. And when high yield is outperforming, i.e. the line is going up, that's a sign of risk-taking in the marketplace. Tends to top and bottom coincident with the market. Coincident. Topped here in October when the market topped, bottom here in December when the market bottomed. But what we're seeing here now is it's beginning to turn lower. What we don't want to see if we're bulls is a trend lower here. That would carry bearish implications, and I think we need to hold the 200-day moving average. What concerns me is that the RSI was never be able to become overbought during these rallies. That tells me that this trend recently has some strength to it. Now, listen, these are warning signs that we're looking at. Semis, high yield. We're not turning bearish on the market just yet. We let price ultimately dictate what we're doing, but we pay attention to these themes and relationships to calibrate how aggressive we want to be. When somebody says, hey, Dan, do you want to chase new highs? This is the type of stuff I look at. The answer is no, I don't want to chase new highs. I do like the FANG stocks, though, playing on our large cap growth theme. Here's our FANG index trading up near highs on both an absolute and relative basis, and likely to see a little bit of a pop here today as Amazon trades higher. I mentioned my market survival guide. Head over to ChaikinAnalytics.com/survival-guide. Everything you need on a weekly basis, looking across markets and asset classes. See why I thought it was a good idea to get bullish on healthcare and bearish on energy. Have a great weekend, everyone. I'll see you back here Monday.